Hi there, this is Mark Nusz again. I'm here to discuss taxes and in another episode of taxes and other necessary things. Today I'm going to focus on what happens if you don't file your tax return. Previously we had talked about when you need to file. Today I'm going to talk about what happens when you don't file, especially when you owe the IRS. The IRS is pretty slow to act in almost all cases. If you don't file, it may be a while until you hear from them, maybe a long time. However, if you do end up owing them, that you're going to end up probably paying some penalties and some interest on top of the original tax. The tax return and the payment are due on April 15th each calendar year. And if you don't pay, you're going to start incurring interest charges from that day forward. The caveat here is that you can get an extension to file your tax return up until October 15th, but this does not relieve you from paying your taxes on April 15th. So if you don't pay, you'll owe interest from April 15th forward. You can usually expect to hear from the IRS through the mail in about 6 to 9 months if you owe them money. The first letter is going to be fairly general, and they're going to say, hey, we haven't received your tax return, you're going to need to file it. If you ignore this, they're going to generally continue to send you mail with each letter sounding a little bit more serious. It may take them 2 to 3 years. At that point, they're going to file a substitute of return for you. Now, when that happens, you're going to be put on notice. You'll get some mail that's going to say you have 30 days to respond. If we don't hear from you, or if you don't take some sort of other action, they are going to assess the taxes against you. Now, the word assess or assessment is actually a pretty important word in the practice of tax law. The IRS cannot come and try to collect money from you until it's been assessed against you. That's a requirement. Now, in our tax system, we use self-assessment mainly. So when you fill out your tax return and you sign at the bottom, you're assessing that tax against yourself. When you don't do it, the IRS will file that substitute for return for you. Now, of course, they don't have all the information. They're just going to have information in their systems about income from wages, that sort of thing. And so they'll use that to prepare your taxes. They're not going to know about deductions that you may qualify for, that sort of thing. Especially if you're self-employed, they're not going to know anything about that. Then you're probably going to be looking at some sort of audit down the road where they'll want to see some information from you on that. Now, when that all happens, you've now entered the world of collections. So once those taxes have been assessed, you're now in collections. And so now they can start their whole process of collections against you. And that's a whole nother series of letters, etc. And we'll talk about collections at another time, but I did want to talk to you today about what happens if you don't file your tax return. It might take them a while, but the IRS will catch up with you at some point, and they're going to, try to figure out what you owe for that tax year. This is Mark Nusz at Westward Law. Thanks for watching.